Hello, Grant. Welcome to this presentation today, made for you. So this is something I think you're really going to like. Um, so we're going to go over how to produce your own statistical research study using the method I came up with, the 7 steps of data analysis. And my name is William Bannon from Stats Whisper. Okay, so I'm going to present this in 3 parts, and at the most, I just want to take up 10 minutes. And we're going to go over why you'd conduct your own statistical research study, in other words, the benefits to you, how to apply the 7 steps of data analysis to do it, which is my copyrighted system, and then real fast go over some resources for learning so you could apply the methods, including the textbook I sent. And if you'd like to take, or one of your staff would like to take the free Steps of Data Analysis webinar, you're perfectly welcome on me. So first, we just want to start off with saying why statistics are awesome. So I know you present a lot of statistics in the podcasts and so on, so this is why I think you're going to really like this. Okay, so you may know some of this, but why statistics are awesome. So because you get definitive answers to questions you'd otherwise just wonder about, right? For example, if you have a staff member, you wanted them to make 30 calls a day, and their name was Joe, you notice in the morning when you compliment them, they seem to make those 30 calls a day. So you have that situation where there seems to be a relationship, but you're not really sure, right? In other words, there's no definitive answer. So how can you test if paying that compliment is really a factor in them making those phone calls? So here's what we have. Now, this is the descriptive data. So this is a lot of what gets presented in the podcast, I notice, which is great. So this is known as descriptive. So it's just the numbers by themselves. So if you took data over 100 days and you noticed every time you paid Joe a compliment, right? 80% of the time he made those 30 calls in a day. Right? Then on the left side, did you give a compliment also? You see no, 5%. So only 5% of the days when you didn't pay a compliment did Joe make those calls. So here's sort of a dramatic difference where it sort of looks self-evident that there is a difference. But right, the statistics will tell us if the 80% versus 5% is a difference which is statistically significant. Right? What if it wasn't that dramatic? What if it was 70% versus 80%? Then it's really ambiguous. You don't know if it's a real difference or not. So the statistics say if there's a statistically significant difference. Now, I know you have an accounting degree, so getting the numbers is great. But as the accountant produces the numbers, the statistician can test the numbers to see if there's statistically significant differences, right? So for example, we have a chart here. Okay, so we could look at these numbers descriptively. So what the chart presents at the bottom is there's 2 groups, a group that got mentorship and a group that didn't get mentorship. And this is their mean income over the year 2015. So you can see the group that didn't get mentorship, the dots, they have a flat rate, right? So they made about 63,000, 62, 63, and it didn't really increase from January to December, right? So the mentorship group had a upward slope, a rather dramatic increase, right? So descriptively, it looks impressive. But we can't assume that it's a significant difference, right? We need to test to see if the difference is statistically significant. So that's what I mean. It gives us those definitive answers, not just eyeballing it. So if the difference between the numbers is not statistically significant, then findings are regarded as occurring by chance, right? So there's no true or real difference if the findings are just occurring by chance. So the statistics tell us if there's a real difference or not. All right. So here's just a little application to everyday life. right? So I'm trying to make it useful. So often in business or life in general, we see differences in numbers, but we can't identify if the differences are significant, like the employment numbers that are reported each month. It's 5% one month, 5.5% the next month, 4.5% the next month, right? So of course it's going to vary. It's not going to stay constant, but unless the numbers are significantly different, it's not really worth reporting it that much because it's generally regarded, it's just variance. So two, we could wonder if there's a possible relationship between factors, right? Such as Joe in making his calls, but we don't have a way to tell if there really is that relationship, right? So these are our two situations where we're left with no way of telling what's going on. Right? So consider if there's differences in these numbers. So you have a new mentorship program, like we addressed before, with 100 staff members, 50 of whom receive the program and 50 of whom don't. Right? So if their annual income at the end of the year is 120 versus 110 for the receivers and non-receivers respectively, we'll need the statistics to say if that's a significant difference. Right? Otherwise, we're just wondering. It looks significant, but maybe it is, maybe it isn't. We don't know. And then two, right? So this is the relationships. So if you have three means of increasing sales among staff, you have a new mentorship program, you have an incentive program, and a corporate spending account. Okay, so the statistics can identify, if we're looking at how those increase sales or revenue in general, the statistics can identify which factor makes a significant impact on increasing sales, and it can also tell us which factor makes the strongest impact. So suppose all three have a significant impact on increasing sales. We want to know which one has the strongest impact. So maybe we're going to drop two and keep one. Which one can we keep, even if all three are significant? Right? That's what statistics are telling us. Right? So it removes the ambiguity of wondering of what is and is not effective. So you could measure and identify what's really happening, right, in the reality of your business, right? And it doesn't have to be internal in your business. That's just one application. It can also be looking at how external factors impact your business or anything else that could be measured. Right? So you may wonder if these statistics are so useful, why doesn't everybody do it, right? So up to now, the process of producing a statistical research study has sort of been a mystery. Even among statisticians, there's no agreed upon method of how to do it. So it's hard to communicate to people who aren't statisticians how to do it. So the 7 steps of data analysis is the first time the process is presented in simple steps. Right? So you could sort of say that the 7 steps of data analysis is revolutionary, right? It's the first time that there's a formula for producing an effective and legitimate statistical research study. And more than that, anyone who studies the method through the books or the webinars can produce a statistical research study with no background in statistics. So here's the 7 steps of data analysis. So this isn't an instructional video, right? It's not didactic, but I just wanted to present what they are so we could see that they're simple, they're logical, and they can be followed, right? There's no mystery to it. So step 1 is the study map, right? So beginning with the end in mind, as Stephen Covey says, right? So on the right is our outcome variable, annual sales, right? That's what we're examining. That's the dependent variable / outcome variable. On the left, we're looking at the predictors. We want to know how they impact the annual sales. And there are those 3 programs, perhaps internally we came up with in the business: the new mentorship, the incentive program, and the corporate spending account. Is each significantly related to annual sales? And which one is the strongest in impacting annual sales? So that's the first step. The second step, data entry. So on the right, the lower right, that's SPSS. That's the statistical software that we use to run the statistical tests. And you'll notice it kind of looks like Excel with the columns and such. So step 2 is data entry, where we take the data, right, the numbers, and we put it in the SPSS software for testing. Now, of course, there's many smaller processes and subcategories in each of these major steps, right? But that's detailed in the book and so on. So step 3, checks of data integrity. Now, this is the real mark of a professional study because many studies skip over these checks of data integrity, right? So most studies actually produce incorrect findings because these checks are not made. They're not often not made at all, but they're often not made right. So it's important to know these, right? So one of the assumptions is commonly known as the normal distribution, that bell shape of scores, right? So that's one assumption we have to check. Then step 4, univariate analysis. Each variable, uni meaning one, each variable is presented as characteristics by itself. So if annual sales is the variable, what's the average sales revenue? 110K per staff. What's the highest and lowest revenues that come in? 50K to 300K, right? So we're describing each variable by itself. Step 5 is bivariate analysis. We're looking at the one-on-one relationship between each predictor and the outcome variable, right? So for example, with our 3 methods of increasing sales, we may see that the corporate account, right, corporate spending account, is significantly associated with annual sales increase. The incentive program is significantly associated with annual sales increase, but the mentorship program is not significantly associated, right? So 3 tests, each looking if each predictor is significantly associated with sales, right? So the key is here, we take the significant relationships and go to step 6, right? So this is almost like an elimination round where we determine significance and bring the significant ones forward, right, to the next round, which is where we determine which is significant when we look at all the effects and which is the strongest. So here we go. So step 6, multivariate analysis. So this is things like regression, linear regression, if you ever heard that. So which predictor has the strongest relationship with the outcome, right? So multi, meaning many. So we're testing the effects of many variables, many predictors on the outcome, sales. So if we test the incentive program and corporate spending account, perhaps one will no longer be significantly related to the outcome. So the incentive remains significantly related to annual sales, where the spending account does not. So there we've tested and determined that the strongest and significant factor in increasing annual sales is the incentive program. And then step 7 is just the write-up and report, where the numbers, the findings are presented professionally and clearly in tables and text. And that's the 7 steps of data analysis. Right? So what does it do for you? Right? So you get detailed insight of what is and what's not working within your business or whatever else you want to study. You have control over the environment because you're making decisions that are data-driven decisions. So if people ask you, why did you decide to do that? Why did you decide to keep this program, enhance that program? It's because it could be partly because of what the numbers are saying. That's what the data told us internally, right? And that's what's so cool about this. And then, the numbers could be presented just internally to your staff. They could be presented in the podcasts, right? There's almost an endless array of options, right? And you can look at each facet of your business, right? Anything you can measure, you can study. You could have insight, you could have control. Right, so it's original research. That's what's neat about it. So it's original statistical research, right? It's not research you've read, it's research you've produced. And you could present the number to staff. The statistics could examine programs, it could examine individual people, departments, right? And like I said, present it externally in podcasts or internally. Everything's appropriate. Okay, so the resources, right? So I sent the 7 Steps of Data Analysis textbook, right? That tells you how to do a statistical research study via SPSS software. So anybody that wants to crack that book and follow it page by page can produce this sort of study. There's example studies and samples, and you just follow along, and you just start by sitting down with a question, and you could end up with a written report with the answers and statistics. Also, like I said, if somebody wants to attend the Steps of Data Analysis webinar, where I describe each of the steps and the steps within the steps over a 6-week period, you're very welcome. So the materials are meant to make the research process so clear that virtually anyone can grasp it and understand it and participate in it and apply it. And anything else you need, you want me on the phone and I'll clarify and discuss what you need to do, please feel free to call me, 347-702-4503, or email wb@statswhisperer.com. My pleasure to help. And I'll discuss all the research and questions and requests, and so you could benefit from this. Just kind of my way of saying thank you for all the things you've provided, including Cardone U. All right, well, thank you for watching. I'll be in touch soon.